Okay, how do I handle different time frames when the RSI, you have different conviction? In other words, it's giving you a different signal. First thing I do is I step out in time. Look at the monthly. What do we got? We got a confirmed high off of this high right here. I'm gonna drop a little line in here. Confirmed high. We also have a divergent high right next to it. So we've gotten our one more higher high in price on the monthly. Let's go down and look at the weekly. Weekly, we sort of have a three mountain. So we have drive one, drive two, drive three. Ultimately, what can happen? We can have a three drive. Three drive basically would look something like this. So what we're doing is comparing patterns now based on what we see. Okay. What we're going to do is look for the confluence of the indicator. So right now, our confirmed high shifted just a little bit on the weekly, but still, if we're looking at the monthly, we know we have this confirmed high. It's in the same mountain. It's just not positioned to equality, let's say. All right, let's go down and look at the daily. So now on the daily, we now have some glaring divergence for this high. However, we have a confirmed high that's way the heck back over here. So this structure started to build back in July of 24. So if you look at, now I want to look at the mounds a little more. I want to look at how this structure is laid out in time. So I'm going to squeeze down. Structure really started here off of this flat. Right, and we sort of have this next. This was sort of mound one, right? Sort of mound two, right? Sort of mound three. They're all expanding, coming broader in time. A little more volatility in price, which we're seeing up here, which is quite common to the upside. I would think the most likely scenario here is I'm just going to go for shoots and giggles. If I'm going to say this is an ABC pattern, most likely it comes down to maybe equality. Now with that, let's draw in my favorite bands, and I like to do this because these are our demand zone. Even though I visually see it, for you guys, that's the reason we're drawing them, to help you understand them. So you have a very small demand zone right here, right, which is right where we should bounce. All right. Then we have a much deeper band zone, demand zone below that, which takes us back down. Notice it aligns with the 61.8 fib, and the 100 fib is the base of that. So that is a very likely spot for us to come back for an ABC retrade. So structural. So in answer to your question, how do you handle divergence between the time frames and the indicators? I step down. Now, on this particular chart, I'm going to come and step down to the 4 hour just for a second, give us a visual. I want to see, our bottom is, moving over a little bit. Didn't put a lower low in price here. So that really isn't a confirmed low. And in an uptrend, or conversely in a downtrend, you don't get confirmed highs or lows. You get divergent highs or lows. So structurally, you have to look at that. Let's come down to the hour just to see what that looks like. See if there's anything there that changes my opinion. Now on the hourly, we have a very aggressive RSI divergent low, right? And a cascading divergent low, 1, 2, 3, 4, 5. So I see where you say the 1 hour implies that we're fleeting or we're bottoming, and there is more conviction in seller exhaustion here because of how low RSI has become here versus this leg. So I see what you're saying, but we also had this huge gap here. So it's a noisy leg. If we're going to bounce, we need to get back above this 27.20 first, of course. I wouldn't like it for long until we get above 27.80, and then I would just use like cascading ads. And part of that is because I think we reject here. I think that I need something more in volume. I need something to really exclude this ABC or this potential impulse leg down, because now I have more confluence that it's not done, because looking at the demand zones and the whole structure and how we're rolling over, it's likely that we put in something like this to the downside. So this is going to be something like this here. I would think that that's very likely that we get that, because we have this rolling up and then we're going to have this rolling over, and quite often you get at least 2 drives with that roll. And right now this drive's not done. I mean, it probably is going to come. I would think something like that would be my thought. So I would suspect that we reject price and continue lower from there. And if demand breaks, then we're going to head, back down to $18. So I don't like this for a long here. I would like it much better if we got into this band zone, and then I would be looking for any conviction on any gaps that are there that would be a reason to get long. That's, where we have some kind of catalyst Forgive me, I'm just going to remove all these drawings. So I'm just looking to see if we have any gap. Nothing on the daily. I have a little bit of a gap here, right here. I have a gap here, 24.96. And that gap pretty much was filled, but still there's a little gap there. So I like adding at 24.96 and planning on adding another piece at 23.80. Outside of that, I like this demand zone right here off of this low right here. So I like this band down here between 23 and 21. It's right in the middle off of what the fib potential is to the downside. But my 2 cents is this is an ABC right here. That's what this ultimately becomes. Just with this look. It's going to get a dead cat bounce. Then it's going to come back and test that bottom. My 2 cents. Great trading. Until next time, guys.